Welcome back to another videos. Join us for the latest news, insights, and updates on the Iraqi dinar. Don't forget to like, subscribe, and share your thoughts in the comments. Let's explore the world of the Iraqi dinar together. The core of the problem is that oil production and transportation, specifically through pipelines into Turkey, have stalled. This halt in movement means billions of dollars are lost daily due to the inability to get oil out to international markets, where it could be sold and generate revenue. Oil is a critical resource for revenue in many countries, and when it is unable to reach its destination or buyers, the economic impact can be severe. In this case, oil is the commodity that could bring substantial revenue, but it's stuck in limbo due to political and economic issues. One main reason the oil isn't flowing into the Turkish pipelines is the lack of an agreed-upon hydrocarbon law, or HCL. The HCL is crucial because it sets the terms for the production, distribution, and sharing of oil revenue among various parties, including regions and the national government. Without this law, there's a lack of a structured agreement on how the revenue generated from the oil will be shared or reinvested. This uncertainty creates tension and mistrust, making it difficult to negotiate with stakeholders, including foreign governments and private companies. Until an agreement is reached, there's a reluctance from all sides to commit to transporting the oil, as nobody wants to assume the risk of not being compensated fairly or in line with the revenue-sharing principles. Another factor at play is the real effective exchange rate, REA, which measures the relative value of a currency against a basket of other currencies, adjusted for inflation. The REA affects how the value of oil revenue is perceived and utilized by the producing country. A favorable REA could boost the revenue generated from oil exports, as a stronger currency can buy more imports or invest further in domestic projects. Conversely, an unfavorable REA could mean that the revenue doesn't go as far as it might otherwise, limiting its economic impact. In this situation, a stable REA would provide assurance to investors and governments alike, allowing for long-term planning and more predictable revenue from oil exports. However, the lack of an agreed-upon REA has introduced financial uncertainty, causing stakeholders to hesitate before making any financial commitments. Frank's statement emphasizes the anticipation for a new exchange rate, which is another layer in this complex issue. When he mentions that all that is needed is a new exchange rate, he's suggesting that a revaluation of the currency would stabilize the economy and incentivize the movement of oil. An updated exchange rate would not only help to clarify the economic landscape but also likely attract foreign investment, as investors would have a clearer understanding of the currency value and the potential return on investment. This revaluation could make oil exports more profitable or manageable, thus reducing daily financial losses. Essentially, the situation is a mix of economic, legal, and political hurdles. Without the HCL, there's no foundation for how oil revenue will be distributed, leading to disputes and uncertainty. The real effective exchange rate and the new exchange rate are needed to provide a clearer picture of the financial impact of oil exports. If the oil starts flowing again, assuming these conditions are met, it would significantly improve the economic situation by restoring revenue streams and enabling the country to use its natural resources effectively. In summary, achieving an agreement on the HCL, establishing a realistic REA, and updating the exchange rate would help restart oil transport and alleviate the severe financial losses currently being experienced. Thanks for watching Iraqi Dinar. Don't forget to subscribe, hit the bell icon, and share our videos. Your support keeps our channel going. Stay curious, and see you in the next one.